This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today on the show, I have Peter Borish. Peter is the founder and chairman, CEO of Computer Trading Corporation. He is also a founding board member of the Robinhood Foundation, one of the great American charities. And Peter has seen just about everything there is to see, I think, in the financial world, and is a wealth of insights. Our conversation today is wide-ranging, but I think for people that don't get a chance to meet guys like Peter, this is fun. It's fun to kind of like see how they think, to see how they started, how they went through things. And I have to say, Peter was exceptionally kind to me over 15 years ago, just giving me time, giving me insights, just providing an opportunity to even just talk. And so I think he's a very humble man, very kind man. And I think this is a great conversation. I always enjoy talking to Peter, and I always see things from a perspective that I might not have thought about before. I hope you enjoy. Well, let me start with something today, Peter. And I should say that I met Peter for the first time in spring of 1995. I basically approached him at a conference, and he did not know me, and he looked at me like I might possibly be a stalker. That's my first memory of meeting you, Peter.
Well, that's because of how you look.
Thank you. Let me jump into something really quick, because I know it's near and dear to you, and that is your charity work. And I cannot think of somebody who's been so intimately involved on so many different fronts and so many different charities for such a long time than you. And in many ways, with what you've done, being right there with the Robinhood Foundation from the beginning, that's just something where I think people, even if people don't know about the specifics of that organization, they hear it and they've heard about it, or they know something about it. So the brand that's been created with that is just phenomenal. And I was wondering if maybe you could talk about the roots of the Robinhood Foundation, how it got started, and then maybe talk about some of the successes and maybe some of your favorite successes over the years.
Well, thank you. Robinhood started literally in the late 80s. We had Tudor and Paul Tudor Jones and Glenn Dubin. We were young. We were fortunate, and we had some success. Part of our success, of course, was what's now the hedge fund / CTA industry. And we were early practitioners of applying risk management and discipline to a lot of the new financial futures markets and other derivative markets that were developing around the world. And New York was good to us, and we wanted to be good back to New York. But we wanted to have a different model. As being market people, we sort of said, listen, if we're doing a good job of how we're stewarding other people's assets, both on the business side, but in the not-for-profit side, then the marketplace will justify that. We didn't want to build a big endowment. We wanted to raise money. We wanted to put it to work. And if we put it to work effectively, then we would raise money in additional years. One of the other criticisms of a lot of not-for-profits was that the fact that the O&A, or the overhead expenses, were high, and that people did not want to donate to a not-for-profit in that case. So we set the precedent that the board of trustees would pay all the overhead expenditures. So if you or anybody else was giving $1 to the organization, and you came down to the office and you saw whatever desk, PC screen, that you knew that the board was paying for that, and that your money was going to go out to those who were less fortunate. We decided to concentrate on New York City because, as we said, New York was good to us, but also because New York is really, in my mind, and I think today it's even more so, it's really the true international city. There's a lot of great cities in the world, but if you look at the totality of diversity in New York and compare it to other cities, I don't think there really is much of a comparison. So it's a great model. On the other hand, New York is a living example today of, the 0.1%, 1%, the term that's been out there relative to everybody else. And I've always tried to teach my kids who've grown up in New York City that it doesn't seem quite right that you have to work or they have to work harder to fail than those who grew up in different circumstances 30 blocks away, which is, a mile and a half, have to work to succeed. So we wanted to reach a better balance there. And we've had successes and we've had failures over the year. When we started, if you think about back in that late 80s, early 90s with the AIDS and crack epidemic, and we focused on one of our first grants was to the what's called ABC, the Association for the Betterment of Children, where you had a lot of crack babies that were born there, and there was concern. New York City has come a long way. They solved that crisis, and fortunately, a number of those children have not had the effects, and they've been able to go on and have more productive lives. The biggest issue, of course, is when it comes to poverty is the totalitarian, right? Everybody thinks, well, if you can get them through school, through college, but it's not that simple. And so it's a complex problem when we try to address it. If somebody's hungry, if they don't have housing, if their parents don't have jobs, it all comes together. If they don't have good nutrition. So we try to take a holistic approach at Robin Hood and are sort of known for our metrics, right? We want to treat it, we call it, venture philanthropy, where we want to try to measure the results and see what works, and what works we try to expand, and what doesn't work, like everything else, you have to make those hard decisions because you have limited resources. One of our greatest successes, and we're very proud, is being early funders of KIPP, the charter school. And just this year, there's the KIPP high school that's opening up in the Bronx, and I'm looking forward to going up there in a few weeks, actually, to see it. We're going to have a board meeting there. So the New Yorkers and the people on the board of trustees of Robin Hood have been tremendously committed. And to me, it's really something that makes me extraordinarily proud. My life, I took a different turn in the sense that I got out of the money management business, went into sort of the investing business, did some things that were successful, but this is by far and away, and what I'm doing in trying to revolutionize the way not-for-profits raise money with Charity Buzz and some of the other consulting work that I'm doing now in terms of that not-for-profits, unfortunately, have not made the adjustments that the private sector has made over the last 15 years. And with the implementation of healthcare change and the costs associated with healthcare, they really need to do a lot of thinking about that to get more efficient, because the seesaw, unfortunately, has gotten more imbalanced since the financial crisis. And for those who think that the financial crisis is over just because the equity markets are at record highs, that's where I think there's a little bit of a disconnect. It's by far and away not over, and it won't be over until the real incomes of those in the middle and lower part start to increase. So that's a long answer.
Yeah, let me jump right in there. Before we go into the crisis not being over, just to pass along something to you, being in this area of the world, and I hope that I can, maybe someday soon find the wherewithal to kind of do something over here, because I feel like knowing you if I was to say to you, hey, Peter, I'm doing something over here, there could be no one that could give better advice on, Mike, here's the pitfalls for trying to do something in the charity space. Here's the things you need to focus on. And obviously America's got a ton of troubles too, but all around the world there's troubles and there's poverty everywhere. It's do you ever and I know you've probably seen more sad situations being involved in so many charities trying to help people, but do you ever have that feeling of like, wow, that moment where you're like, wow, I just can't help everybody? How do you I mean, you've helped a lot of people, you helped a ton of people, but that feeling of like, well, you can't help everybody.
Well, of course you can't help everybody. And I like to say that's why it's so important in every line of work to have low barriers to entry and new entrants, and particularly in the not-for-profit world, because the energy and certainly to a certain extent, the naivete of those that come in, whether it's a startup in the tech world or whether it's somebody who says, I've got a great idea for a new not-for-profit, who think that these problems are solvable. When you've been anywhere for a long time, whether that's in the private sector or in the not-for-profit sector, you have the potential to say, wow, I've been doing this for 25 years, Robin Hood is, and there's still people who are in poverty. It's not worth doing. But you can't have that attitude, because the quality of life today is better. So even though the level of poverty is still there, the nature of the poverty is not as bad as it was, if that makes sense. And I'm worried because, obviously if you cut back on the safety net that the government has put in place, then there's the potential for people to fall through that safety net, and you can have a lot higher levels, or the level of poverty may not change, but the quality of what people are can be much, much worse. So we're never going to eliminate it. It's just not possible. But that doesn't mean that you shouldn't continue to try to help those who are less fortunate.
Let me ask you this. So this could be a really long answer. We could probably go on this for a long, long time, but maybe there's a short answer you can give. Let's say somebody out there is listening right now and they've got some capital, they've got an idea, they want to start a charity. Is there any advice that you could give them, like a couple big picture points? I mean, they can always try and reach out to you, but are there a couple big picture points that somebody could hear from a man who's been involved in charities and starting them from the ground up for 25 years? What can you tell somebody out there that might be having some of those ideas that you even had 25 years ago?
Go for it. But don't try to be too much. Have a localized idea, start small and grow. In the first year of Robin Hood, we gave away $62,000. 25 years later, we gave away over $110 million. The key is it's just like all economics, right? It's marginal and it's incremental. And you have to start at the micro level. There has to be a reason for it. There has to be a demand for what you're trying to provide. And you have to be really, really passionate about it. If you're going to start a not-for-profit, it's just like starting a business. You have to live and breathe and believe in it. And at Robin Hood, we've been very fortunate because the quality of our staff has been outstanding and committed. And sort of the best not-for-profits, that's the key, whether it's on the educational side, healthcare delivery side, food services. The people that run them are just like the best business people, very, very passionate and living and thinking about it all the time.
Well, that's great. I think that's probably inspiring to people that don't know where to start. Maybe they have the idea they want to give back, and I think that really gives people, a framework to think about starting. So I think that's great. There are many ways to give back. The key is it's kind of, think about it if you're trying to get healthy, right? It's incrementalism. You got to get off the couch. Now, that getting off the couch may be writing a check for the first time. It might be writing a small check.
It might be going down and visiting an organization. Maybe it's just on the weekend for the first time, getting involved in a walk. But ultimately, these organizations need people's intellectual skills, their ability. If you're an accountant, if you're a banker, if you're trading, if whatever you can do, these organizations can need it and learn. You don't come out of nowhere to start a business. And if you do start a business out of nowhere, you have a great idea and you write a business plan, you need venture financing, then you want to have mentors, then you want to have a right type of board to guide you. You have to have a development plan in place, and that development plan is including execution, but also in the not-for-profit world, and same with the business world, the ability to do another round of financing. In the not-for-profit world, that's development every single year. You have to raise money. And if you're willing and have that passion and commitment, you can do that. If you don't, you can get engaged in so many different ways. But the key is getting off the couch and getting engaged.
I think it's great advice. It's great advice. I'm going to do a shift on you, though, because I can't have you on the podcast without picking your brain on some of the issues that everyone around the world is talking about, and you, by the many things that you've been involved in over the last few decades, you've had a unique catbird seat. I can't think of anybody that I know that has a more interesting Rolodex than you do. So where are we today, 5 years after where we thought with Lehman Brothers the entire financial system was going to implode, ATMs were not going to work, and I think universally it seems like most people, and I'd be curious to your opinion, seem to think initially what happened with the Fed was very good. They saved the system. But 5 years later, it seems like the Fed is heavily involved, and it just seems like there's a lot of uncertainty. And we were talking about this a little bit earlier off air, but where do things stand today, Peter?
In the first case, in general, it's always easier to make a bearish case than a bullish case. It's always easier to be more pessimistic than optimistic, right? So you can look at certain things and you can highlight that and say, wow, the world is coming to an end. And it's because you focus on a certain thing, right? In terms of growth and optimism, because you don't know inherently where the next engine of growth is going to come from. In the 25 years, whether it was the financial services industry, whether it was the development first of the PC world and the internet world and the mobile world, right? If you had perfect foresight for that, you'd have all the money in the world. And of course, if you had all the money in the world, then money would be worthless, but that's a whole other story. But so you don't have perfect foresight. It's easier to be more pessimistic. Where we are today, in my opinion, is that rule number one is that you don't get any credit in politics for disaster averted. And the coming together in the transition where you had a Republican administration and then going into the Democratic administration in 2008 was critical. If it was later, and given the way that the parties are behaving towards each other right now, I'm not so sure that we would have had that support if you just had a Democratic president and a Republican House. I'm very concerned because I look at what we're doing as the boy who cried wolf. Everybody says, and even you, right? Oh, we have another week. The government shuts down. Every time they go here, they come to the end and they reach a deal. And boom, boom, we're fine. Mm-hmm. But in the boy who cried wolf, at the end, the wolf came, but nobody believed him. And that's real. I'm really concerned. And I believe that the Fed did not taper because they understand that fiscal policy continues to be contractionary when it should not be. And it's getting more and more contractionary. And as I said earlier, the safety net is getting frayed and people are dropping through that. And the first rule of markets is if something is not sustainable, it will end. You don't necessarily know when it will end. We've all lost more money than we'd like to count on thinking that it is the end. So as a student of markets and a student of history, I say to myself, all right, let's look at what's happened here. The euro's retraced its entire range over the course of the year. People are bullish on gold, but it hasn't gone anywhere. In fact, it's much closer to the lower end of its range than the upper end. You had a little volatility. Crude oil has basically been in a range. It hasn't acted, in my mind, given the uncertainties of the world, that well. I look at the commodity markets. I've seen volatility, mean reversion, up, down, everywhere, and in foreign stock markets, but the U.S. equity market. So I scratch my head and say, at some point, that's not going to continue. If you look at history and you look at the volatility of the stock market, and what we've had, an 8% correction, a 4% correction, or thereabouts, intraday closing, in the 5% range, that's very low. So now we've had very little volatility. We're long in the tooth in terms of the age of a bull market. So if you combine that with the fact that we're due for a normal correction, which could be, 12 to 20% or thereabouts, which isn't earth-shattering, and it could get worse, it could be less. And then you combine that with the fact that I do believe that one party, and you can take the blame wherever you want. Full disclosure, I'm a Democrat. I believe in the history of looking at the world that appropriate government action during an economic slowdown is very, very important to the recovery. And I analogize it that the government's job is to push the rock up the hill when it starts to come down. And that starting to come down is a recession. And that's both through the fiscal and monetary policy. Right now, all we have is monetary policy. It's not enough. And now we have one party that's the ball is coming down the hill, and they're on the other side of it trying to push it down more quickly. And monetary policy is trying to counteract that. If that ball gathers moss and picks up speed and really goes down the hill, that is not healthy for the economy of it all. And that boulder right now is sort of this disinflation, deflation, and it's this tug of war. And if it picks up and you're having this credit contraction combined with the disinflation or inflation, deflation, I think we have some serious concerns.
Let me throw this at you. So you are a man who has, even though you just say, "Hey, I'm a Democrat," you've got friends on both sides of the aisle. You're a man who you've got friends on both sides. And just to kind of give the counter, not necessarily, maybe I agree with this, maybe I'm not sure, but I saw Stan Druckenmiller the other day, and he essentially said something a little bit different, but he was kind of saying, hey, when the current Fed action stops, it sounded like he was out there saying, look, I could see the entire equity gain reversing, but he was putting a lot of the onus on the Fed. Look, you once worked at the Fed. How do you feel about the actions that we're 5 years past the emergency point in time, or are we past the emergency point in time? I think that's what's confusing to a lot of people out there, and I think you probably have a unique perspective on that. Are we still in an emergency time?
First of all, I started my career at the Fed, so my having insight from that knowledge into what really goes on at the FOMC meetings is a big, big stretch. I'm politically active. I stay involved in the industry. I'm involved in the educational not-for-profit that tries to teach everybody and provide Series 3 training, compliance training, ethics training. So I'm very much engaged. To answer the question, I'm going to respect those. I believe in intellectual work and in studying, and I also believe in history. And I'm going to give the benefit of the doubt to those who have full understanding and an early insight into a lot of the economic indicators that I have. Now, you can try to blame the Fed, but let's just go back. Everybody has been saying in the blame the Fed game, we're going to have big problems with inflation. Nowhere to be seen, right? The government hasn't credited it. Interest rates are going to spike. Well, of course, they went to record lows on the entire yield curve, and even now at 2.75 to 3% on the 10-year is low. So the government is not crowding out anybody. And that's because fiscal policy and monetary policy are completely out of whack. If you could get more of them in balance, then you could probably tighten up monetary policy a little bit if we had some semblance of sanity on our fiscal policy side. But we don't. We don't because people are picking over the safety net, which is a very small part of discretionary spending, right? So if you want to cut food stamps, you're really doing nothing except hurting those who are less fortunate. At the same time, you want to have, subsidies to large farmers. It seems to me if you want to take a more market-based approach to government, the government should be out of corporate welfare, where a big chunk of our money goes through embedded tax breaks, subsidies. If you want to cut back on welfare for those who are less fortunate, my priority would be the other way around. You cut out corporate welfare before you cut out social welfare.
Peter, what do you do? Let me actually interject there about the comment about the corporate welfare. What do you do, though, in a world? I mean, here I am sitting in Southeast Asia, very close to Singapore, and it's like there's this migration to Singapore where they're saying literally in a couple of years, one out of every 20 people will be worth 7 figures plus. So what do you do in a world where there's so much migration of capital and companies like Apple, I just use Apple as a kind of a poster child, can take so much of their profit and leave it offshore, leave it outside of the system? How do you think those issues should unfold in the years to come?
Well, we need to innovate in our tax policy, just as private companies innovate in their tax policy. They're just trying to stay ahead. Apple is amazingly dependent, right, on the United States for its sales, for its innovation and parking money off ashore. If it doesn't pass the sort of smell test, then it's probably not a very good policy. And I think most people would agree that enabling large multinational companies to park their money in zero, sort of tax havens, at the same time that we're trying to cut the social safety net isn't right. But the real issue, besides the corporate tax arbitrage, so they're more sophisticated, so more things come on the individual. It's look at the numbers, right? So you have this whole issue of the 47%, they're not paying taxes, but they're really paying. The world has become upside down. If you're wealthy, life is great. But if you're not wealthy, taxes have become more and more aggressive. Well, the government, we can't raise income taxes, so you know what we're going to do? We're going to put on hidden fees.
Sales tax, right, for example?
Yeah, but on my cable bill, right? You got a 33% tax on your cable bill. Look at your cell phone bill, your airline ticket. You got this, you got that. Those things all raise the average tax rate for those who are less fortunate. The Social Security, well, we're going to limit the tax up to this wage level. So that means the more you make over that, your average tax goes down. So for the individual in the middle class, lower middle class, their total fees and taxes are going up. The higher income you have, the less it has been. And so there's that aspect to it. There's the corporate welfare aspect to it. There's the tax arbitrage by corporations, and it comes together. And you're seeing that in a change in what I would call, and you have to look beneath the surface. New York City, we're going to have a new mayor, first Democratic mayor in 25 years. What are the implications for that? right? That's a change of, feeling and sentiment. If I'm one of these guys in Congress, and one thing about American politics, if the pendulum has gone too far, it'll swing back the other way. And in my mind, the pendulum has gone way too far to this notion that, oh my God, that tax rates are too high and you only get productivity when they go lower. And let's start with the assumption that when Arthur Laffer wrote the Laffer curve, it was 100% correct, right? If you have a zero tax rate, you're not going to get any revenue. If you get a 100% tax rate, you're not going to get any revenue. So then you draw the two, you have an inverted parabola. At some point, there's a marginal tax rate at which you maximize revenue. So when Ronald Reagan was president and we went down, okay, maybe it made sense. But to say that going from 35 to 39 is going to change anybody's behavior, to me, we haven't seen it. You haven't seen it there. If we look at some of the best growth periods in the United States, whether it's the mid-90s or even where we are now, right? Look what's happening to the deficit under President Obama. The numbers indicate the deficit has been declining very rapidly. Revenues are coming in. Growth has picked up. Like in life, you need better balance. We need better balance between our policies for those who are fortunate and less fortunate. We need better balance between fiscal and monetary policy, in my opinion.
You brought up a couple issues, and I agree with you. There is no current there's no current evidence that anybody can say, hey, the interest rates have dramatically changed one way. There's no massive inflation problem yet. And I'm sure some people are saying, well, Mike, there is inflation, but by the metrics that everyone uses, it really hasn't adjusted. I think for me, the thing that I wonder about with the Fed, especially considering the last two times where they really brought interest rates down low, is are we in the middle of another equity bubble? And it's not really an issue of, in my mind, in inflation and interest rates. It's more an issue of how big does the equity bubble get? And as you say, it's kind of like, is there another black swan lurking? Is that, these things can only get so big before something happens, and none of that is predictable.
Of course, there's a black swan lurking. There always has been, and there always will be. When we talked about it's easier to be more pessimistic than optimistic. Yeah. I mean, that's the nature of the business. You have an extended run up, things decline. Are we in an equity bubble? I've tweeted a few times, and it's like, well, if you're bearish, there's a tremendous distance, right? If you look where these stocks have come from, where they could go, and even if it's a normal correction, as I said, we could go down significantly, and it could just be on a traditional path. I step back and I ask everybody, and you can ask your listeners, there's only one question that you have to answer. Was March of 2009 the equivalent of July 1932? If March of 2009, in your opinion, is the equivalent of July of 1932, then you should be buying ETFs, diamonds, spiders, and go away and come back in 40 years. From 32, right, to January 73, we went from 42 on the Dow to 1,000. And we had a lot of things in there, right, including World War II, including recessions, assassinations, the big steel problem in 62, et cetera, and the market went up. So if you believe that the March of 2009 low was the equivalent of that, then all this other discussion is just, it's fun. It's gossip. Everybody likes to gossip. I live in New York. I'm a Nets fan. I'm a Mets fan. I'm a Jets fan. I'm a Knicks fan. I need to gossip about that. But there's a difference between doing financial analysis and gossip. And that's the really, really big picture. On the other hand, when you look at this period and you can say to yourself, all right, here we are. Here's the disconnect between economic growth and the level of the stock market. Yeah, there easily could be a correction. But if you think that the March 9 low was generational low, then the fact that it's a correction, you shouldn't worry about it. If you're a trader It's a completely different question. I'm more concerned what's happening with our fiscal policy, and if it continues to tighten and they push that rock down the hill. That, to me, is the biggest risk out there. Is everybody will say, oh, recessions come and it comes from policy mistakes. I think we're steering at one right now, and that's my concern. My concern is not private sector innovation. Yes, the model has changed somewhat. It's very, very fascinating, right? The internet, to me, is the greatest deflationary machine that's ever built. It's sort of a winner-take-all marketplace. It eliminates the ability to price discriminate. But one thing that the internet has done, which is fantastic, is it's validated markets. I believe in markets. There isn't a person that I know that isn't afraid to go on to eBay or Amazon or any other place and look at an auction site and say, here's my value, here's what I want to buy, I want to offer this to sell, whether it's a TripAdvisor or Priceline. People believe in that. They believe in markets. So if you go back to the first point about CTAs and getting out there, everybody's a speculator today. If you're going on any one of these sites and you're bidding and offering, you're essentially a speculator. That is the basis of one of the other businesses, that I'm trying to build, which is Charity Buzz, except that it's the only business that I know that turns the internet upside down, which is you're trying to get the highest price possible, but people feel good about it because the net proceeds are going to a not-for-profit.
Let me, I want to shift gears on you one more time because I've only got you for about a little bit longer here. I remember one of the first times I was in your office. I think you walked out for the moment and I noticed on your desk, you were reading a book called Risk and Opportunity. And as I sat there and waited in your office for a few minutes, I looked up and you had one of the most diverse libraries of books. And this wasn't just the typical book that you can find on Amazon today about trading. I mean, you had stuff going back decades. I would love for you to maybe even make some great, putting aside all of our interesting conversations so far, we just kind of shift. You've been a quant researcher, quant trader for a long time. You have seen a lot of different things in your career. But I was wondering maybe if you could point and give back to the listeners some books that have been very inspiring to you, either old or new. You can give me 1, 2, or 20. I don't care. And also maybe if you might outline some of your early mentors or maybe an early experience that really changed you in a trading sense. Maybe the two things, kind of the books and maybe the mentor.
Well, the books are difficult. The books are difficult because you sort of evolve over time. I think everyone starts or they go into and they read, Reminiscence of a Stock Operator, and gives you, it's not a technical book, but it gives you sort of the emotional ups and downs of what you may face as someone that manages or tries to trade. And that's a great place to start. I think one of the most influential books for me very early on was the first edition of The Elliott Wave, because, again, it talked about how emotions and patterns impact the way that people perceive markets. Again, markets are sort of upside down, right? Everybody loves Netflix at 300 here, but at 60, they thought the company was over. I don't know anybody that goes into a store and says, all right, here's a shirt at 70. We're going to put it on sale for 45. And you go, forget it. I'm not going to do it. I'm going to wait till it gets to 100. Then I'm going to buy it. So there's this counterintuitive aspect to it. And that book was very helpful to me in understanding. He says, you've got to take the emotions away. And by the way, if you don't understand something, you don't have to participate in it. The other book that was incredibly influential, and I was honored to help provide a lot of data to it, was George Soros's Alchemy of Finance, which is another way. And his whole thesis is, think about high frequency trading just for a second, right? What George is saying is, there's never really a full equilibrium. There's an equilibrium for the moment at the margin, and then things move away. So for today, Netflix, that equilibrium price is 300. That price can be a lot different tomorrow. And you need to analyze and you need to look at your data to come up with that solution. I think that one of the more influential books on risk was The Great Risk Manager, and I think it was Peter Bernstein's book on risk.
Against the Gods.
Against the Gods was a great book. I thought that, obviously the related or derivative book to that was the book on black swans, the first book that he wrote, which was good, but, too analytical and got into it. But the basic sense is that money, we misperceive risk. We do it all the time. Whether it's in lotteries, whether it's in betting, it's the human nature. And the best economist that I can think about in some of his books that I've read is Richard Thaler in terms of behavioral economics and just getting you to think a little differently, right? If I said to you right now, hey, give me $1 and I'm going to put you in a lottery and you're going to win $10 and here's a very low probability of doing it, you're not going to do it because the reward isn't that great. But if I up the probabilities in the sense that is infinitesimal, but you have a chance for $1, but you have $400 million Powerball, you're going to okay, it's worth it. We misperceive risk all the time, but we're willing to take a small risk for an incredibly high payoff. But we miscalculate that often when it comes to the markets and the leverage and the chance that it can be wrong. And we want to perceive ourselves as winners, but successful traders are always focusing on their losses. So there's a big difference between talking about markets and where they're going to go versus trading. So that's sort of on the book side. And you learn, going back to sort of trading experiences, studying the markets. I mean, I can think back to early days and understanding that you learn from your mistakes. I don't want to come up with specific trades, but I can promise you that I really remember my losers a lot better than I remember my winners, because that's how you learn, is by focusing on those losers, not dwelling on them. So I think, I've always used this experience, and maybe we talked about it in one of your books or not, the emotional aspect of trading and the fact that if you are a trader, and I always mentor, I'd say 2 things to young traders if they come to me. And they go, oh my God, I can't believe it. I just had the worst day of my life. And I go, well, I've got good news and bad news for you. And they go, what's that? I said, well, the good news is you're still in business. And they go, what's the bad news? The bad news is if you're in business long enough, you're going to have a worse day because records are made to be broken. And that's something that you always have to keep in mind when you're looking at the markets and you're looking at volatility. Just because that was the worst day doesn't mean there can't be another worse day in history, whether it's in volatility, whether it's in magnitude of the trading side, and that goes in both directions, right? Just because you've gone up a lot doesn't mean you can't go up a lot more, and that's why people lose so much money trying to pick a top and also trying to pick a bottom.
No, I think that's great advice. I think it's sometimes people forget if they hear somebody like you have some very strong opinions about politics, about government, about society. But then also, I think if people are listening to our conversation, they can see, okay, but when it comes to trading, Peter's got a switch and he kind of says, okay, let's take the emotions out and let's look at trading perhaps a little bit different than the way that I might look at other aspects of my life and the world. Is that a fair assessment?
It's a very fair assessment. Trading the objective is to try to end the day, if you can, with a little bit more money than you started the day. your political philosophy and your sort of view and how you treat people and treat others is independent of that particular trading style of trying to have more money than less. What you do with your success has to do with your philosophy. And I don't really, to me, as long as people are doing something and they're trying to help others, and it could be philosophically different to mine, then I'm happy about that. What I'm not happy about is what I consider sort of faux economics, that you see evidence, but you don't want to believe that evidence. You go there and you demonstrate the proof that the world, the earth is round. And the guy goes, and you're telling them this, and you're on the beach and looking and says, I don't care what you say. I don't care what your math says. I'm looking out there at the ocean and the world ends. It's flat. If that's somebody's belief, you're not going to convert them. And politically right now, we have too many people on both sides that are sort of in that flat earth society. And that is not good politically, but it spins out into economics, which makes it even worse in terms of what I see where we're going policy-wise. And again, keep the image. Government's supposed to be that entity trying to hold the rock up when it's coming down, that big boulder. And if our policy goes to the other side and we push that rock down and it starts to accelerate, our growth is going to decline, and we're not in sustainable growth to reduce employment and raise incomes right now. That's what the government's role should be.
Peter, you as long as I've known you, you've been extremely optimistic, passionately optimistic about the power of government to do good things and perhaps do the right thing, and perhaps have these parties that have very big disagreements to come together. Is there a side of you, though, that kind of says that the whole thing has become so broken that it's, I don't want to say hopeless, but it sort of feels hopeless? I would think no matter what, like the average person out in middle America, so to speak, whether they're a Democrat or Republican, I would think the nightly news and how they go to the polls and stuff starts to feel like a bad movie that just keeps playing in rewind, and it seems to get worse and worse. I would just think you're, like I said, you're so passionately optimistic, but I just wonder if the whole thing is there a side of you that says maybe it can't be fixed? Is America taking a wrong turn that it can't get back?
Again, you're making the case that the more pessimistic case is easier to make, but let's look at the local level where people have to work together and change is there, and you've seen the improvements in cities. The joint efforts to improve things like healthcare for those who are less fortunate, and focusing on the needs of education. On the national level, there's an issue. Part of it is, again, markets work, right? Districts have been gerrymandered, so it's the constraint is being challenged from someone on the further extreme of your party, whether it's left or right, so you get more entrenched interest. But I never leave. I believe markets work from the littlest thing, right? Whether if I live in New York City and I want to decide in my head, should I drive to the airport or should I take a cab? And then I look at what's it cost to drive to the airport, what's it cost to park. And guess what? There's a pretty good arbitrage there. And if you're going to stay for a day, overnight trip, it's probably a push. If you're going to stay longer than that, you're better off taking a cab because of parking. Markets work. If, and this is a big if you think that what's happening in Washington is dysfunctional and the seesaw has got out of whack, and the only way that things get change takes place, and you can go back to 2008 if you want to see that, if when the wealthy get hurt, then you need to be really concerned about the level of the equity market here. If what you say is true, and we know there needs to be change and it's dysfunctional, the markets will adjust and help force that change. And that's going to be painful for everybody if indeed you're correct in that assumption.
Well, that's just a hypothetical. I don't have any beliefs, Peter. I'm just a guy floating around Southeast Asia.
Of course you have belief. But by the way, right? Again, markets work. China, you've seen the changes there where they've tried to not let the market work. And the biggest issue is, as Milton Friedman said, breaking the thermometer because you don't like the temperature doesn't change the temperature. And that's partially where we are in Washington. They don't want to look at reality and say, well, we'll just break the thermometer and things will be okay. That's not going to be there. We've got a few weeks ahead of us that are going to be a bit nerve-wracking. But as I said at the very beginning in Peter and the Wolf, I'm concerned at this point because nothing has happened. And this is your black swan and potential that they're going to say, hey, it's okay. We can shut the government down because we can maybe default on the debt. And now you go all the way back to your economics at the very beginning. And Basquiat, who wrote about the economic effects, there are things that you see, but then there are things that you can't see when it comes to economics. And that's my concern of where we are addressing your issue, particularly on the national level, that the implications of what we can't see are quite concerning to me.
I can't keep you anymore. I know you've got to run. We covered 3 distinct areas that I think people will enjoy. Your experiences with your charities, the politics side of it, and the trading side of it. I think 3 distinct segments, and I think you give some nice experience for even for people that might want to say, there's going to be some out in the audience in America, for example, that are going to hear immediately, Peter Borish, he says he's a Democrat. I can't listen to anything he says. He has nothing for me. I'm a Republican. Well, they'd be making a big mistake if they did that. But I've learned a ton from you over the years, so I appreciate it.
I think first of all, I want to define on the trading side, the right to change my mind starts as soon as I put my tongue back in my mouth. So that's how you survive in the business. So certain things that we talk about, maybe by the time the podcast is up, will have changed. In terms of the bigger picture, I think I'm like the vast majority of people where you believe in economic discipline. I believe in markets, but I also believe in that the government should not be in. Look at it this way: the simplest way is say it shouldn't be in the bedroom, and it shouldn't be in the boardroom, and people should have choices throughout their life.
It definitely should not be in the bedroom. I'm 100% agreement with you there. So I don't really have a party that I can attach myself to. So as long because there's a lot of folks that I grew up with that want it in the bedroom, and I still don't understand that one. But I guess they can fight those fights. Not my thing. They come in my bedroom, I might have to start a fight. So. But hey, Peter, listen, it was good chatting, and we will talk again soon.
All right. Well, I look forward to it. And I look forward to seeing you when you come back over here to the U.S.
Absolutely. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.